Welcome, ladies and gentlemen. It's time for a company update about Maple Gold Mines. Maple Gold Mines reported a new mineral resource estimate for the company's Douay gold project. In addition to new drill data from the winter 2018 and 2019 campaigns, the new estimate integrates the company's new 3D geological and structural model to better constrain gold mineralization. At cutoff grades of 0.45 grams per ton gold for open pit resource and 1 gram gold per ton for underground resources, the Douay deposit is estimated to contain indicated mineral resource of 8.6 million tons at an average grade of 1.52 gram gold per ton and inferred mineral resources of 71 million tons at an average of over 1 gram gold per ton. This yields to an underground inferred resource of 307,000 ounces gold and a pit-constrained resource of 422,000 ounces gold in the indicated and over 2,045,000 ounces gold in the inferred categories. In total, now delivers the Douay gold project indicated and inferred resources of 2.77 million ounces gold, which is a huge step. The estimate includes several conservative adjustments with the aim of delivering a new resource estimate that will focus infill and step-out drilling to optimize existing resources and advance the deposit toward the economic study stage. Maple Gold Mines adjusted the conceptual pit shell slope assumptions, which are less steep now, with pit shells now also extending to shallower depths. They updated the capping methodology, levels and spatial restriction to control the influence of higher grade samples and improve the bulk density modeling of individual geological domains. We like the conservative approach compared with former estimations and that the company focuses on economic viability and left the idea of a large super pit, which was maybe a bit aggressive. This new resource estimate looks like some different set of objectives, like showing that Douay is still a very significant resource after applying a more stringent and conservative set of parameters and assumptions to the updated database and new 3D geological structural model. This was confirmed with a total contained resource number of the same order of magnitude as the previous estimate, notwithstanding all of the conservative adjustments. The 2018 to 2019 drilling defined new zones and mineralization that helped offset reductions resulting from this updated approach. They also optimized pit-constrained resources to better balance total contained ounces with economic considerations. There's always a time when economic considerations are more important than pure excitement. It looks now that Maple Gold Mines did this transition with new estimate. Also, the focus to bring this project in the future into production is on now and is considered under realistic conditions, and the new resource de-risks the project a lot. This is also important for future investors and possible partners. This new estimate also showed for the first time a possible project scale underground potential. The current data indicates that there is excellent potential. The current data indicates also that there's excellent potential to define a larger underground resource with further drilling to enlarge the initial 307,000 ounces to maybe 500,000 ounces up to 1.5 million ounces, which would raise the economic viability dramatically for the whole project. As said, this is only a game plan and an estimate. Possible average grades would be in a range of 1.5 to 2.5 grams gold per ton. Historical grades showed so far plus 5 grams gold per ton, but those results are not compliant with NI 43-101 rules. As said, they are historical. So more drilling is required, but the perspectives look very encouraging. Major gold companies and institutional investors want to see resources constrained by 3D geological structural models and using conservative estimation parameters that might be realistic in a future operational scenario. Therefore, whether Maple Gold Mines is advancing this project to economic study stage on its own or with a strategic partner, you should apply conservative adjustments to the estimation parameters and focus less on total in situ ounces and more on economic factors. Maple Gold Mines did well to change a bit the strategy, and we think this should lead sooner than later to a re-rating of the company and the stock, of course. Thanks for watching us, and bye-bye from Switzerland.